little bit while you greet them, and then bring it
You can
down.
leave it on. That's fine. Long as it's YouTube. Okay.
Oh,
Good morning, everybody. We are live. Me and Jamie hanging out in here again. Of course, having to have our discussion. Once this, we're live and we still got discussions to have. But welcome. It is Wednesday, Hump Day Wednesday. We are here. Um, Wednesday in the market. Okay. Yeah. I'm just starting us up, but Mr. Jamie is going to run it from here. Go ahead, sir.
all righty. We got the most active. Janae's baby. NVIDIA is on the list. Good morning, everybody. Hope you all had a great evening, great night of rest and relaxation.
Oh my goodness.
We got we got for our most active two populars for us that trade NVIDIA and Tesla are at the top of the list. So that is happening. Dow rises to fresh records as Wall Street builds on September gains. Keep that in mind. If you remember, I think it was last month, people were screaming about we in a recession is coming. And I'm like, that's not what the charts are saying. So anyway, for the US as of right now, we have everything is mostly up except for Dow Jones, only down slightly. Everything is up slightly, which is par for the course. It's going to bounce around since everything's just opened. The market just opened. VIX is down 0.19%. It's at 15.36. For Europe, everything is mostly down, but again, not down that much. Usually I consider 0.50% to be about, what I think is still kind of low number. So FTSE Milano is the only one that's up, and it is up slightly at 0.04%. Asia is mixed. The ASX 200 and the Nikkei are the only two that are down by the same amount, 0.19%. But Nifty 50, HSI, and Shanghai are all up for our futures. Head down futures down 0.04%, but S&P and NASDAQ futures are up 0.07% and 0.14% respectively. That is what we got going on there. For our earnings. So today is Wednesday. So before market open today, we had Cintas. That's what was going on there. That was the only one. Well, that's not the only one that reported. That's the only one that Earning Whispers highlighted. After close today is Micron, which we know is in the tech space, as well as Concentrix, which is also in the tech space. We have Jeffries, H.B. Fuller, and Worthington still reporting today after close. Tomorrow morning, we've got Accenture, Inspire, TD Synex, CarMax, Jabil, Reed, and SHL Medicine. In the morning, Accenture, TD, Synex, and Jabil are in the tech space. After close, Costco, BlackBerry, in the tech space, of course, Vail Resorts, and Scholastic. I believe we were talking about Scholastic recently. They are after close on tomorrow. Nothing is highlighted for Earnings Whispers on Friday. Again, that doesn't mean nothing is being reported. This means that Earning Whispers didn't highlight anything. All right, today, 10 o'clock, orange folder, new home sales. All right, we got 10:30 crude oil inventories, orange folder as well. And then 4 o'clock, we'll be up out of there. But FOMC member Kugler speaks 4 o'clock today. So we got 2 orange folders to look out for. You know how it is. There may be some type of what we can describe as allergic reaction to what they say. And there may be some volatility or what have you. We had the red book year over year. Make sure that this is today, yeah. So we had the red book year over year. right? Neutral was the impact. FOMC member Bowman spoke. That was 2 stars. Housing price index year over year for July, 4.5%. Looks like neutral impact. That was a 1 star. Also 1 star house price index month over month for July, which was it was down slightly from what was forecast. House price index for July seems to be neutral. That was also 1 star. And then we have the S&P CS HPI Composite 20 SA month over month for July. Neutral impact, that was 1 star. And also the NSA month over month for July, which was 2 stars. Looks like no impact for that. The other 2 star was the 20 NSA year over year for July. That was neutral impact as well. 10 o'clock, 3 star. The CB consumer confidence for September. Am I looking at the right date? That's wrong. We're on the wrong date. Right? Yep, this is the wrong date. Something ain't right. Something ain't right. I'm like, this is starting to sound too familiar. Like we done been here before. NSA. Soon as I say NSA, I'm like, something ain't right. And the NSA, there you go. Here you go. Now we got it going on.
You got it figured out?
Rewind. That's the rewind sound.
That's the rewind sound. Okay.
NBA 30-year mortgage, neutral impact. 1 star. This was at 7 o'clock. NBA mortgage applications week over week. Neutral. The NBA purchase index, again, 1 star neutral. The market index, mortgage market index was neutral, 1 star, as well as the mortgage refinance index. That was also 1 star neutral impact. 7:30, though, we had the building permits for August. That was slightly lower than projected for a 2 star. We had a 1 star, the building permits month over month for August, slightly lower than projected. 1 star, another 1 star was a current account. Oh, no, that's not us. Building, we got building permits. We skip down here to, we got new home sales will be 3 stars. That's coming up in about 9 minutes. New home sales month over month for August is 2 stars. Crude oil inventory, 3 stars over here. And then once we see crude oil inventories on investing.com, we usually end up with a run of information that does not show up on the Forex Factory calendar, of course. But the EIA refinery crude runs week over week. And then we also get the crude oil imports. The only 2 star in that group is the Cushing crude oil inventories. But we also get distillate fuel production, EIA weekly distillate stocks, gasoline production, the heating oil stockpiles, the EIA refinery utilization rates week over week, and the gasoline inventory. So all of those run together with just that Cushing as the 2 star. And then we have the 5-year note auction at 1 o'clock. After that, of course, 4 o'clock, 1 star. The 5-year note auction is 2 star event, by the way, over here on investing.com. And then FOMC member Kugler Speaks is a 1 star over here. So I ain't saying that they ain't important, but 1 star kind of means low impact. All right. We are going to, are you ready for Mancini?
Almost.
All righty. So let's take a look, see at what happened on this morning. Well, let's look at what happened yesterday. We'll do SPX. We're going to switch over here to the 15-minute chart. And actually, I'm going to move some of this around. I'm going to mark the 15-minute candle right here. Right? For those who are doing the breakout. And let's take a look, see at what happened. So this is where it opened. It was a tiny bit of a gap up yesterday and a nice little drop at the beginning of the day. And when it came up, it came up past where it opened. Dropped down a little bit, but it ended up closing above where it opened. So this was one of those. I don't see it happen all the time where it comes up and closes above where it opened, but it happens enough, and so hopefully, whoever got into the this drop right here, especially if you had a PDT hack, hopefully you got in early enough for a PDT hack to fill on the other side. So when it came back around, you were okay. All right. What you got to say, Alyssa?
So I'm ready with Adam. Adam's numbers. Volatility dried up completely as we enter day 4 of basing in SPX. Compression will lead to expansion and trend soon. 57.26, 57.04 is the chop with 57.17 as the weak midpoint pivot. Midpoint pivot. Not sure where we are right now. SPX. Looks like 57.36 right now. So we're not at that midpoint pivot. We're above that. 57.04, well tested. Is that an 04? Yeah. No change. It keeps 57.36, which is where we are now. 57.43, 45, and 57.54 live when ready. Dip only if 57.02 fails down to 56.92. And then what he had said prior to that was it's day 4 of basically has been a key pivot as a trade posted, holding failed, breaking down 9 times target yesterday with 57.17 and 24, and we're still at 57.24, but we're not there anymore. Plan today, 57.17, 57.04, well tested our supports. Okay, so really go with this top message, which is 57.36 was a target which we just hit and pulled back a little bit off of, and 57.43 to 45, and then 57.54 are also targets for SPX this morning. Basically, keep watching. If you're going to trade SPX, if you're trading XSP, you got 576 on the call credit spread and 569 on the put credit spread. Right. We talked a little bit last night about using, the outer bounds for XSP if you want to look at outer bounds for the day, is looking where does it come down and create a low of day, and then where does it go and create a high of day, and then those are your out of bounds for your credit spreads. All right. Okay. Talked about that already. This is our list for the week. If you haven't gotten into anything and you still want to check out the list, some of these things may have made some maneuvers, but this is the list that we have for the week. Some of these may be in perfect position now. I actually did SPY for the week yesterday, but some of these others are take a check. This is our list for the week. We also still have the trends alerts. If you're still using the alerts from Peakbot, which I still use them, so when I say still using them, you can, and every day those alerts will provide for you trends for call credit spread, put credit spreads that will get this week's expiration. Those are coming up and they show like the highest expected value. So the top 10 choices are given to you, and then you can go lower down in the list if you want to just look at the whole watch list. But you do have the alerts that you can use in there. I had one more video I wanted to, last night I uploaded, it was yesterday, not really last night, uploaded a video about gaps. A video about gaps where most of us are comfortable seeing the gaps where there's a break in the price, where you can see a gap or an opening between the candles. But many of us don't see the gaps that are not from color changes. There's gaps, and from, there's other places that there are gaps. Basically, that's what I'm saying. There's other places where there's gaps. And I did a video on it last night. I uploaded it. Where are we? Oh, that's why this is looking weird. Okay, let me see. Want to make sure we can get us to our channel. Welcome to the channel. How do we identify gaps, not just the ones with the candle opening, but the others? And how do you trade them? Because identifying them is one thing, but how do you trade them after you've identified them? That's what else we want to know, is how do we trade them after we've identified them? This is looking so weird over here. What is that? Okay. Where is it? There it is. Let me share my screen. Present. Share screen. Okay, well, I did not anticipate it just starting the video. Give me the skip. La la. Okay. Schwab, right in time. This is what we use, right? So this is the video. Pause. There we go. This is the video. I'm going to go back one so you can see where it is on the channel. It is this video, how to use gaps to increase your profits. It's, if you go to my channel, this should show up as one of your top choices. So you want to identify gaps, and then how do we use them? What types of gaps? How do we mark them? What's going on? Basically, all the things that go along with gaps is in this training, this 39-minute training. So go ahead and avail yourselves to that. Go ahead and watch it. Let the ads play. Let the ads play. Let the ads play. Why do we let the ads play? Because people get paid when the ads play. Yes, that's how we do that. Okay. I will stop my screen. I don't think there's anything else I was going to share there. Go ahead, Jamie. You can have the con again.
All righty. Let's see here. Looks like it is. So I wanted to, for our tech talk today, point out a couple things. You're gonna be seeing, I am very sure, more information about AI, and so this is something to be aware of. You got one group of people that's calling AI a bubble, a bubble that might bust. They try to say, well, it's just like the .com bubble of the 90s. This is not that. Trust me. So on the one hand, we'll see surging AI demand could cause the world's next chip shortage, which I believe is more than likely. And the reason why I believe that is more than likely is because AI is not going anywhere, and it is very data and graphics intensive. Definitely data intensive, can be graphic intensive. And so why is that important? Because you have different countries that are putting more money into AI, because everybody wants to be the top dog when it comes to AI. All right. And so even here, you have a billionaire tech CEO says bosses shouldn't BS staff about impact of AI on jobs, as an example. China is trying to find a domestic NVIDIA rival, but that's kind of difficult, right? This is what they're saying. China is having problems duplicating what NVIDIA doing. What is that going to say for how much work NVIDIA is going to need to push out going forward of the things that they can farm out to China, everything they can't do? But that means we can expect a bottleneck at some point. They're not building factories fast enough in order to have the supply or to have the demand taken care of. So just be aware that things that are attached to AI are things that could, show up on your charts positively and negatively. Of course, open AI is one thing, but anything dealing with software and suppliers, and including electronics components for some of the stuff that's being built, et cetera, et cetera. We want to be aware of those so we can take advantage of those jumps when they happen. Okay. Or not just jumps, drops as well. I don't always want to say it like it's only on one side, but I do know that last I checked, here's another one here. Middle Eastern funds are plowing billions into the hottest AI startups. So nobody's plowing billions into something that they especially that's considered on the cutting edge. They're not just plowing their money into that for no reason. So that's something to really be aware of. We'll keep hearing about AI in the future. And so do not be surprised when you see it show up in the charts. In terms of our 15-minute candle, there has not been a breakout. I marked SPX. There has not been a breakout yet on SPX. Usually what I'll do is go check out Russell 2000. And this is why I like Russell 2000, because sometimes Russell will have broken out of its 15-minute, which it has already done. And it looks like it may be retesting right now. Right? So that is something to watch out for. It is 10:04. I know that some people will start working on getting in right about now. Some people wait till 10:15 and others wait till 10:30. But it will be interesting to see what happens right about here. I don't see any tickers. Do you have any tickers, Arlissa, or no?
I mean, take a look at SPY and SPX. I think you just did, but IWM, I think IWM is having some issues right now.
Issues. Any issues IWM having? No, see what I. Yes, IWM is also a Russell 2000, and it is falling in and out of love with you. It is falling, player.
Oh, goodness.
I'm gonna put this extra line down here. So on this chart, you will see. I'm gonna explain what this is that you are looking at. Put this other line in here. Okay. All right. So this is what we had marked. Actually, it was this one that we had marked before. So technically, this would be one revisit, but it has created its own thing. So if we did leg in, base, leg out, or if we consider this one revisit, either way, there could be a gap down right here that needs to be filled. But IWM is Russell 2000. This is the ETF. It is what we call bearish. It has decided to drop. One thing that we will note that it is getting closer to this buyer's gap. Right? I'll zoom in on that for you. All right, let me hit. I think I can do control. See the control or shift, one of those two. But it is dropping closer to this gap right here. That's what these purple boxes are on my chart, are gaps.
Going for the gap. Dun, 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 dun.
Oh my God. So, okay. All right.
Oh, my goodness.
I got you. I'm with you on that.
Mhm.
That's funny, dude. But now, see, don't do that, because now that's going. Not only is that gonna be in my head, but I'm gonna start coming up with verses. Um, so this is where we're looking at some gaps occurred in between here. All right, that is something to be aware of as well. Boom, boom. We'll put that one about right there.
Nankali says, once it nears that gap, is it plausible that buyers would drive the price back up again? That is a buyer's gap. So yes, it is plausible that there will be buyers in there that will step in. Now, will it go all the way through the gap? It could. Even though there was buyers in there, it could go through the gap and then buy itself back up. Generally, the bottom of that gap is going to provide support. So keep that in mind.
I'll agree with that, and I'll also add that in this situation, this is just crazy right here. This is just crazy.
Those wicks are bananas.
This means that the sellers pushed his candle down, but the buyers was like, nah, I don't think so. So with the amount of between these three candles, with the amount of buyer activity, even just recently, but even if we go back here, I would consider this to be an area where it wouldn't surprise me to find buyers all in here at all. Now, of course, since price is currently below this gap, that would mean that it may or may not bounce off this and come back down. But at the very least, yeah, I consider this to be a buyer's gap that could push it up to some degree. When I mark this as a cheer, leg in. Really, originally I think we did 2 in the base with the gap up right there, but you could also, some people have also done it this way, leg in, 1 in the base with this as a leg out. I've seen it done multiple ways. I no longer fight people on how they want to chart it. But do whatever makes
Because
you happy.
for why? Because why?
Well, I'm just saying, I can't say it's illegal. I mean, do like a cheer. Just because it ain't pretty don't mean it ain't valid. So it just depends on what they want to do. But
Depends on how much butt you got.
how much what?
How much butt you got for the chair?
Okay. I'm gonna leave that alone because then we'll get into the DKS situation, and I don't want to be about. I don't want to relive that again. Okay.
Oh my goodness, the people.
So we're gonna look and see what's going on. Obviously, since this looks like it's trying to push down, and this is bearish, I'll be looking at a call credit spread myself. I know that there are many people who are trying to do the, what is it? The 27th is this Friday.
Mm-hmm.
I'll be trying to go above. Probably more 24, but 83% off the money wouldn't be a bad idea. Not investment advice. This is a one spread. This is 12 cents, which is 12% return on collateral. All right. So that would be one thing to look at. Where this is sitting, it would not be unreasonable to also be looking at an iron condor. This is why I like gaps, because I can go under the gap and use the gap as a buffer, if you will. And so you could possibly get good premiums. I would wait for that to come down and turn it around. All right. But we will be looking at somewhere in here. You can do 76% if you're Alyssa Pinkleton.
Yes. What's wrong with that?
I didn't say anything was wrong. I
Mhm.
said you can do it if you're Alyssa Pinkleton.
It's sounding like you think something's wrong with it.
You like to be closer than others. 11 cents. If you can catch it while it is still dropping. So between those two for Iron Condor, you could possibly do about 22 cent, which is $22 on $100 collateral. 22% return on collateral. Not a bad idea. So we're bearish on RWM for right now, and could keep an eye on that. You want to look at SPY as well, right?
Yeah, might as well.
SPY, Miss American Pie. All right, we had this on. This was our broadening formation that we was working on. All right, here's what we got. We are at highs. And so what is happening is we're still trying to push up. That's saying we are still trying to push up. And listen now, don't be smoking hopium when it comes to this stuff.
Don't.
People be like, I hope it's gonna do this, I hope it's gonna do that. Listen, don't hope nothing. Hope you understand what that chart is saying.
Yeah, that's where your hope.
That's where your hope
Your hope need to be put right in there to where that chart, what that chart says.
So, but I will say, because this is a, I'll put that down about right now. Since we have this gap, this being a buyer's gap, gapped up, came back down, tapped this. It would not surprise me if this comes back down and hits this gap again and bounces. All right, that would not be unreasonable to think that that could happen. So that would be something to watch in that situation. All right. We'll just put this here. This is what I have. Again, I'm looking at this candle here as the base. And it'll be these two. As the base. Base candle for our buyer zone. Actually, no, sorry. We're going with this one as the leg out. So leg in, base, leg out. I really don't like this particular formation, but that's what we're given. The only other option. I've never liked leg outs that didn't have a solid body to them.
Well, the leg out is that last candle, right, with that long wick.
Not the way I have it targeted. If I wanted that one to be the one, then I will have to bring it up like this.
Yes, I feel like that's the formation.
Look at your leg in. This whole thing's gone.
Okay, and then you take in, so that right there, yep, that becomes the base.
This is adding too much risk. This is
no. So what the risk is, you don't enter until that top of that hammer.
To
there, yeah.
Well, it's only $2. I guess it ain't that bad. Only $2.
Yeah, INTC is up today.
But anyway, when you do a formation like this, that means your leg in ends up being smaller. So it depends on what your, I guess you could say, charting convention is. But I typically like to have two solid legs and less risk. So that's why I started mine off like this. But I do not like, I never have like those candles. I'd rather look at something on the weekly to get a stronger.
Well, what you do there is on that one. Oh, sorry. Go ahead.
No, go on. Say what you got to say now.
I was gonna say that what you do is with that hammer candle, the next to the leg out, that becomes, you bring your risk level or your stop losses up to match with these next two candles. with these the base candles, those become where you put your stop loss or whatever, where you come from there. So that way you don't put all that risk on down to the bottom of the red candle. Your risk is the bottom of the hammer candle. Up one, the next one. Yeah, up to the bottom of the next candle.
Ma'am, let me get to the clicking,
Oh,
please.
I just was making sure that that's when you know I was talking
Click
about.
over there. Good Lord. Jesus.
Mm-hmm.
What you're saying? Hold thine horses. Hold thine
Hold
mule.
thine.
All right.
Mhm.
Something like that.
Yeah, so that's where you would use that.
Also, be aware up here in this area, you have a parity line, which actually goes right through this gap anyway. So, parity line is price has been support and resistance in the past. So, that is something worth noting as well. Which for me would be another reason why this could bounce when it comes back down to hit. But again, depending on the force, it could just go right through there, depending on what news is happening, et cetera, et cetera. Right. Last but not least, I see Intel in the mix. See Intel looks like it's catching the beat down. Yikes. Dude, right now, I don't even think Intel got a friend in Jesus, dude, for real. This is ridiculous.
What are you looking at? Intel is up.
Oh, wait. NTC, my bad. IN. Intel is getting mixed.
Yeah, there's Intel. What are we talking about?
I had
It's in the gap, baby. I'm in the gap, baby.
okay. Intel is getting mixed news because I believe it's Broadcom was talking about doing a takeover. At the same time, as we were discussing in previous conversations about Intel, I wasn't sure what they was going to do with the foundry, but I figured they would do something with the foundry to kind of get rid of the issues that it's having in terms of they're trying to shed debt is what it boils down to. And so, of course, they want to be more profitable, right? That makes sense. So what we have here, if we're just charting this regularly put that in quotations because I don't even know if there's such thing as regular anymore, but seller zone, blow this up as best I can. Then we got a buyer zone, which has a cheer formation right here. All right. Leg in, two in the base, leg out. We got space. But this is only about $4, $5. And then we have a seller zone. Right? So it's trying to do its thing, but just know that if you're watching the news, Qualcomm. Thank you, Janae. It's Qualcomm talking about a takeover. Just know that if you're paying attention to the news, especially with Intel, you may see, some immediate impact on the charts because something with the Chips Act, I believe, just came up as well. They might have qualified for some type of funding. So be aware of that if you're going to trade Intel. So it's definitely trying to fill this gap, has been falling off for quite some time. what is this? July. But I think as far back as February, you can see where it was falling off. Even back then. So here's the end of January. So it's been falling for a minute. So we'll see if it's going to be able to have enough to push through that gap and make it work. Since it is going bullish, one thing I would be looking at is a put credit spread. Somewhere around, probably not enough premiums to do it for this Friday. Me personally, I will be looking at next week for that. I said 24 and 2 be 22. I'm looking at 81%. You can do a 50-cent spread or 100. You do 100 spread. I'm sorry. If you do a one spread, which would be $100, that would be 11 cents or $11 on $100 collateral. That's what you will have there, right? Of course, you can look at going at the top and probably right here for 26, strike 26 and go one spread, 11 cents. So if you did Iron Condor, that's still $100. You're looking about 20% total on collateral. All right. That's the way that shapes up. Okie dokie. Let's swing back around real quick and look at SPX and see if it has broken out. And then we'll bounce out of here. SPX, 15 minutes. Has not broken out yet. Created a little bit of a new high though. Interesting. Russell did a retest right here. So it did break out. It retested. Who knows if it'll continue down, but that's what it's doing as of right now. So let's get you guys squared away on the latest. The U.S. Dow Jones is down 0.39%. S&P 500 is up 0.04%. The NASDAQ is up 0.36%. The Russell 2000 is down 0.25%. And the VIX is down 0.84%. It is at 15.26. All right. The Dow and the S&P are trading near record highs. All right. ETT declaration. By faith, I am a successful trader. I'm a wise and knowledgeable trader. I make smart and lucrative decisions for my portfolios. Money likes me. Because money is comfortable around me, it is drawn to me. ETT daily prayer. Lord, give us wisdom and knowledge for our trades today. Help us to make smart and lucrative decisions for our portfolios. All right, everybody. Thank you for joining us this morning. We hope that you got some information that will help you in your trading day. Please click like and subscribe. We truly appreciate that. Also, make sure you stick to our E2T motto, stay green and get this money. If you have any questions, you can put them in the chat box below, or if you're part of our Telegram, you can always tag us. We appreciate seeing you online, and we will talk to you on tomorrow. Thank you.